Welcome back. Fixed investment in South Africa has taken a knock. The value of new projects fell 28.7% to 184.8 billion rand in 2023. This comes as the private sector pulled back on projects as the economic environment in South Africa worsened. And joining me now with more of the detail is Economist at Nedbank, Crystal Huntley. Thank you so much for your time, Crystal. Now, just to start off with at the top, the composition of the data. Is it both a public and private sector fixed investment? And also, what projects do you take into account?
Good afternoon, Nati, and good afternoon to your listeners. And thank you so much for having us here to chat about these numbers. So just first of all, before we head into the numbers, I'd just like to give the listeners an idea of what exactly this project is. So what it is a listing of project announcements that have been made in the public sphere over 2023. And the projects that we capture, these are projects that are 20 million and above. So it's important to note that it is not actually the gross fixed capital formation number that you see that forms part of GDP. It's just a number to basically articulate what we see happening within the economy when it comes to plans to invest, plans to put down some fixed structures or expansion of sorts. So that's the one thing. So, and what have we seen? You rightfully said that we saw this number fall dramatically from 184.8 billion from 260 billion last year. And the breakdown or the composition of this is such that the government has overtaken the private sector as the major investor, so to speak, if I may call it that. So the project announcements captured from government amounts to about 55%. And in total, that's 101.6 billion, which is up from last year of 21.7 billion. That's what it was last year. Then you saw private sector projects. These fell considerably. It fell from 203.3 billion last year to around 56.1 billion this year. And then the other element is your public corporations, which we capture separately from our general government. And those projects were worth 27.1 billion.
It's quite interesting that you say that government was the major driver of new projects, because I think the man on the ground would argue that they're not seeing a lot of infrastructure movement and investment from the government. What actually does the breakdown there look like in terms of what they've been doing, what they've been looking at in terms of where they plow their money into?
So a lot of these projects within the government sector, you're looking at big maintenance and infrastructure upkeep. So the largest project over there is an infrastructure project into wastewater management and sewers. So that's what you're seeing. Another big element of that is your initiatives or your maintenance of road infrastructure. So you'll see road infrastructure is another big one. So instead of really expanding on infrastructure, developing new infrastructure, what you're seeing is more upkeep and maintenance of infrastructure that's already there.
All right. And an infrastructure that is dilapidating. Let's go into the private sector, because a lot of companies have been reporting that they are halting their fixed investments, whether it is upgrades or new projects to support their operations, saying that obviously because of the load shedding issue and the cost of load shedding, they're investing into renewable energy. But how much of that capex forms part of the bigger infrastructure investment that the private sector is making? Is it still a small part, or is it growing?
And you see that what you're saying about the private sector being unwilling to really invest in expansion projects, you're seeing that being reflected in the numbers. So what you're seeing is that almost 50% of the project announcements that we have captured, these are into renewable energy sources. So the largest one is 11 billion, and that's into a solar plant. So these are the kind of investments that we are capturing. These are the announcements that we are seeing. Granted, there are a couple of, I think BMW, they've announced an expansion project over there. So you see that one. So here and there, but it's very small amounts. The numbers speak for itself. I mean, that's less, just under 50%. So half of that number that we see is into renewable energy sources. And it speaks to the dire state of our economy. If you can just imagine being a business and trying to function in an environment where there is no power. So now, instead of placing your money into expansionary activities or investing in something that's going to make your company more efficient, in order to just keep producing, what you need to invest in is renewable energy so you can keep the lights on, so you could possibly produce what it is you're accustomed to producing.
Yeah. I mean, Crystal, it is an election year, and of course the governing party is going to try and prove itself by investing more into infrastructure. But how much muscle does the government actually have for that? And can we expect new inflows and the benefits to start reflecting this year?
So one thing we have to note is that there are a number of infrastructure projects that are already underway.
Okay.
I think the president mentioned and highlighted a few in his State of the Nation address. So there are these projects that are underway. However, the state of implementation, as we all know, has been slow. We have seen some progress with respect to the Renewable Energy Independent Power Procurement Program. We've seen progress made on that front.
Yeah.
And according to the National Treasury, from the MTBPS, there are about 6,000 megawatts that are still in the pipeline that is to come on board in the next 2 years. So these projects are actually all captured within our CapEx listing.
Okay.
But what we would like to see is, you obviously need to see a faster progress of these projects being implemented. We would actually like to see the results. We would like to see significant progress being made. I think that is really important if you are going to attract private investment into the country. Then we're going to have to see progress taking place at a much faster scale. As for, does the government have the capacity to do so? Well, like I said, what has already been announced is in the public sphere. It's a lot of private-public partnerships that are coming to the fore. So that's kind of outside of the fiscal constraints that we're currently facing. But we hope that progress is speeded up.
Yeah. All right. Well, thank you.
Lack of a better word.
Yeah, well, thank you for that, for giving us insights on that. Really an important conversation to have. Of course, economic growth and also employment hinges on that fixed investment. Thank you so much for your time, Crystal. Appreciate it. That was Economist at Nedbank, Crystal Huntley.